Good morning. Hey, everybody. Yeah, thanks for reminding us about that, Alex. We have 3 Fed officials speaking. Who the hell knows what they're going to come out of their mouths? And quad witching. I said we need to be groundhogs today. Anyway, I think the markets, the way they're trading tell us to be just that, either nimble, see if you can find a needle in a haystack as to what's moving and trade it accordingly. And, overall, what's going to get this market moving? Well, the Saudi thing had its gyration at the beginning of the week, up and down for oil. Then we sat on the edges of our seats with the Fed cutting interest rates. And of course, they did what was expected, no surprises. The markets jiggled around and they looked like they were going to go down until they did not. And they came back up, roaring back up. And, they looked like they were going to keep going higher. And actually, another little peekaboo new high there on the spiders, S&P 500, and down they went. And now they're down today on this dividend disbursement, and the futures are up. So we've got that divergence between the spiders and the futures, and that's why. So we'll see how they come back into alignment here. Things are, they're just stable, flat, and we've got this wide trading range here. This was the prior trading range, and prices broke out, and this was the correction bar signal, long signal. And so yesterday looked like a second correction bar long signal. We went over some of the internals and so on and so forth, thinking, okay, this should be able to, but it didn't happen. And tried and came back in again. So trading range inside of a trading range. We've got this smaller trading range here, and which doesn't make for a good environment, not even for day trades, because the range here now is relatively narrow. So, we've got some things moving down here. Some, Dan will go over them, but, overall, it's type of a market environment to protect yourself from not getting chopped up. And, we've been saying that for a little while. So, and it's been the case. Eventually, things will happen. And as we look at, bars like this that say, hey, things are going to get going. And okay, you got a couple of days of moving, and then, choppy slap. And now we got this bar here that said things are going to get moving. And they did for a few hours or whatever, and then come back down. And so today, Fed governors talking, officials talking, quadruple witching, and things are likely to be bouncing off of relatively tight support and resistance areas. So you take that information, look at whatever you're trading, and be careful and be selective, as you always should be, and maybe take it easy. Qs looked like they were going higher and came back down, and so coming back down is a good lesson in of itself, in that bottoming tail bar, and it's overall it's a rather sloppy pattern, again, a range within a range. But the fact that it came back down, as you look at this, again, it's a 24-hour chart, coming back down and forming a buy setup on the hourly time frame. So while that's a topping tail with an opposing bottoming tail, this is a situation where multiple time frames can give a little bit more clarity, even a lower one. And as you see, you got some wide bars here and crazy kind of stuff, but this is a buyable pullback here. And so what's happening here pre-market is then lighter volume and such, and overall, within this trading range. So sometimes you're going to get this kind of a pattern where it wasn't preceded with, this kind of a mess. And so you take these different lessons on price patterns and put them in a folder or a file somewhere that you can review to become familiar with all these different price patterns and how to put them together into the future. So, Russell, I don't know, trading range, kind of trading range there hourly. And we'll look at the futures. But, if this market's going to go down, I think this is the one that has the potential because the way it went up. But it's got to break down below these lows here. And, buyers stepped up there. That's what this reversal is right there, where this looked like it was going to dive. And then it reversed right back up again. All right. So that's the Mr. Schizo pattern type of situation where it's a fake out. And this, let me just get a little drawer thing here. That is a real breakdown. I mean, and what I'm saying, the reason I'm saying it in that way is, you see prices slicing through support like that, and then it begins to continue. We have to believe it's going to continue its move. And rather than do that, it ripped right back up again. And just, it's like one of those patterns that everything here is suggesting it's going to go lower, and it's kind of like just rips your heart out. I mean, I'm just talking out of my own point of view because I've gotten caught in stuff like that myself. And it's like, damn, do I really want to do this? Yeah, I do, but not today anymore. It's too crazy. So, and it's what we're dealing with right now, this kind of crazy uncertainty that's going on. And so if you're playing things from a trading range vehicle, let's say like spreads, Iron Condors, and you can define the levels with relatively small times to expiration, that works. But where you have things moving sideways like this, and we're talking market here, we can find stocks that are trending. You can find a lot more when everything's going, but it's not the same as when things are trending. So again, you have to look at what is and get your expectations in alignment with what is, rather than what you want. The rapid drop to the breakdown overextended the market. Well, not necessarily, Howard, because when we look at a breakdown, you could say, well, is that extended? Well, look, was this extended? Was it extended here? Yes. Was it extended here? So the point is, it got extended, and it got more extended, and it got more extended, and then it went sideways. So a sideways market at that point says, hey, is it resting before the next leg up, or is it distribution for the move down? And as it broke down here, right, the patterns produce thoughts about what's going to happen next. And the breakdown says, hey, that was distribution. It's going to go lower. And then it rips right back up again. And it's like, what the F? Excuse my language, but, so now we have a trading range. It's like that was a fake out. So what's it going to do here? So we readjust our levels, right, as we're looking at something like this, because this is out of play now. It doesn't mean anything anymore. And we have new levels. So can it break down, or can it break out? Trend is up. This is sideways. So it's consolidating this supply that's over here. And I suspect we're really not going to know a direction until next week. So, we do our best to read the tea leaves to create a bias. That's what we're doing here every day pre-market. And then we see what actually happens. And as things unfold that may be not in sync with what our bias may be, because we are not infallible, as professionals, we have to kind of say, hey, you know what, with all that talk and analysis that we went through before, it's not working out the way it seemed to be. So let's readjust as best we can. Okay. So S&Ps, same story here. Big trading range so far, smaller trading range. What's going on here, and which way is it going to go? Is it just going to bounce between here and here? I don't know. I suspect it's not going to. If it goes up to the high, I suspect it's not going to keep ripping. And if it goes down to the low with these, you know, buyers of the dips here, it just creates a pattern that just doesn't have a high probability situation. So we look for other things, see if there are other possibilities out there. Maybe an individual stock, whereas we're looking at the markets here and saying, you know what, the markets just don't seem to have the patterns here that make sense to get involved unless you're, you know, a scalper. So if we had a situation where we had maybe down here, if we went back and looked at times and saw some rounding bottom and breakdown failures and all of that, we could have a bias that there's a higher probability of a bigger move at that time. So we don't have that right now. YM, same story. Right? I've been saying this morning after morning, and that, you know, while these patterns aren't exactly the same, they are quite similar, you know, as we look through these different markets. And so we've got trading ranges within trading ranges and attempts to go down that fail and attempts to go up that fail, which is a picture of uncertainty. So if the picture is uncertain, we have to be uncertain because we're following the pictures that we're looking at that are creating our biases and beliefs about what's happening. So if what we believe is not in alignment with the picture, well, we're going to get disappointed. And that's just a fact. And we don't have anything to go on here that gives us, you know, that event or what Dan calls a something. So we may just have an inside trading day or whatever it's going to be. Right now, it doesn't look like it's going to be anything meaningful. So there's the futures for the Russell, and the same story, you know, trading range, yada, yada. That's kind of boring. Of course, oil, you know, trying to make a reversal here. What was resistance becomes support, came down real hard. When you got this kind of a vertical drop, it has a lower tendency to really get any real something going here. But it is something that, as I look at the intraday pattern, it looks more attractive than the equities do for a possible some kind of intraday move because of the way it came down. You know, it created the void. And there are the bonds, which, you know, look like we're going lower. We talked about the potential for a measured move. It didn't happen. Now we're above the wide range red bar, and you can see the grind to the upside right here. That's the grinder to the upside on the hourly. With a weekly, you know, with the wide range bar, I thought it would come lower. That's why, you know, I was looking at something like this that would possibly make a turn. So, and the way this is kind of a grinder like that, there's no pattern here. So I don't know what this is going to do. I would think maybe it stalls in this area. You know, there's some resistance here. And in reality, it's really creating a resistance point. And, you know, you can see the last several days of this price action here has created, you know, a little trading range, another trading range, you know, so if it breaks out, you know, if it breaks down, if, and gold, lo and behold, another trading range, you know, so nothing of great interest there either. You know, again, a drop like that, we look for it to stay in the lower half of the wide range bar, you know, where sellers keep coming and then it breaks lower, right? So this is breaking lower here. It's not happening and it's a mess. If it can get above here, well, maybe gold is going to go up. But, you know, within here, there's the greater opportunity to get slapped around. And silver, another trading range. We got trading ranges galore going on here. Almost everywhere where we look. And let's just take a look at the euro here. Well, no surprise. A trading range. So, you know, be careful here today not to get chopped up here. And, you know, there's some stocks that are moving around here. Again, I'll go through the list and we'll just see how it unfolds today. But it may just be a day to, you know, go play golf, go to the beach, go have lunch somewhere and don't come back. whatever it is, but it doesn't look very promising at the moment. So that's it. Have a great weekend. Those of you on YouTube, I'll be here in the room with you guys, and we'll see how it all happens. Yep, I know Paul's got the great idea there. Still 0 days to expiration Iron Condor, collected on both sides.
That's a definite probability today. I mean, this is our favorite option selling day, of course. We like gappers, we like earnings, and sure, we like the ETFs. We'll do the same factory work that we do every day, pattern, go through our checklist, see what the premium is, strikes, and absolutely. All right, open positions in weekly options trader, Tesla, put spread, a little bull flag there, that looks good. Actually, it looks like you can add over these highs now. Lift, put spread, and BABA put spread on the breakout, closed with a topping tail like many things did. Spiders, Microsoft, Whiskey Bravo, so many things looked great yesterday and closed like that. And finally, Netflix gapping down here. This is not looking good. We entered on this one green day right there, and then I put them on probation the next day. Yesterday, we were holding our breath. Doesn't look good. We're short the out of the money. It's in 280s. Swing trader, Cara, been in a coma here. Marijuana stock, CPRT, long stock on Wednesday's breakout. Expedia covered call. We're short the 133, so just let them take it. Let it get a sign today at a profit. Hess, short puts. Yeah, oil. That was, quite a failed breakout there. Kilo, we have a covered call. Mighty Mo, we have 1/3 left. We closed a third right near the dead low yesterday over a 5-minute bars high. MR, another oil stock. This one was a core trade, and we have a new stop under this little pivot. Oscar Charlie, we're long stock and a put spread. TERP. TERP made a new high, so I moved the stop to Wednesday's low. DK was a bullish 1, 2, 3 yesterday. That also closed weak, but our stop is under the wide range bar. SITC is a core trade. We did a half lot over Wednesday's high. Teradyne, we bought call options, and it's gapping up here. Looks good. I saw Micron up, but no pattern there. LRCX has been strong. Look at that beast. TYL was a breakout that we bought yesterday, and finally Whiskey core trade, and we already rolled the calls yesterday. We rolled them to next week, so that looks great. The gappers here, Finser 2450. It's a big gap on the daily, but look at this monthly up here. Monthly target would be about 28, so we'll watch that on the pullback. Texan, it's worth watching. WDC had some kind of news. PCG, this is a California power company. I'm not messing with that. It's, talking about bankruptcy and everything. HDB, McGraw sent me this. 113, wow, that's a big gap up here. McGraw said there was a big out of the money 105s options bought into the close yesterday, like 500 of them. Whoever did that, I just think it's just my speculation, 99% insider trading information. Look, that's in a nasty downtrend. and right into the market close, you're, taking a big bullish out of the money bet. Well, those out of the money calls are now $8 in the money. We'll multiply that times 50,000, and that's quite a paycheck somebody just made for themselves. Roku here down again. Remember yesterday we were talking about the little breakout here in the afternoon, which I liked, but the reason I wouldn't have done it, we were talking about two main reasons. One is, I said, you're swimming upstream. You're swimming upstream of this bearish daily. I said I would have loved it if this downtrend here on the 15 was an uptrend. And then number two, I was saying, the internals were not supporting day trade longs in the last hour of the day. But anyway, it worked a little bit, but you can see now it's gapping down again in alignment with the bearishness of the daily. Xilinx gapping down. I read the CEO is leaving, stepping down. So gap into 100, and this one's been lagging. I mean, look at our LRCX, Teradyne, etc. It's lagging now. That's a bear call spread candidate. So let's leave it on our list for that. I'll put it here. Let's see, gapping up to 60.88, bullish gap, and it has a price void. I just would have preferred it to go sideways more after this big run, but it's a bullish gap. It's a day trade long watch. Marijuana stock here, gapping down. Look at these moving averages. That's strength to the downside. CRC got shellacked here. It's gapping up, but no pattern. I got no interest in that. MDR, another oil. Now this one's better for a day trade. I mean, just compare the 15. It has this big price void, and it gapped over this resistance yesterday morning's pre-market highs. That's a day trade long watch. You're still swimming upstream on the bearish daily and weekly, but this would be the chart just for a day trade, not for a swing. SCS had earnings, gapping up, but it's coming in hard, so that's messy. McGraw saying STX lowers guidance. Well, did they do that yesterday? Because yesterday was the shellacking day. SCHL had earnings, 40.45, gap into resistance. AAWW, that looks horrible. CSTM, I think this is just our leftover list yesterday, little bull flag. 1, 2, 3 on the weekly. Alcoa, deep move into resistance, pulling back. I like yesterday's gap down and reversal. So that's actually maybe day trade long. IRT was a 1, 2, 3. I got this on my list still. Look at Xilinx going down here again. Here, I'll put IRT here. Yeah, Clack was the other. We have this as a put spread watch. Let me put him here. Pins. Alex was mentioning this yesterday. I said I like it over yesterday's high. Who missed your entry? McGraw found this, but I like the weekly breakout, McGraw. So I sure hope that pulls in for us. Overstock, we need a potent reversal and then maybe do a put spread for next week. X is a mess. AMT was a nice trade yesterday. We've been finding a lot of these patterns came down hard, building a base through a couple days. XEL is one of them. So actually, I liked XEL for a day trade over yesterday's high. That looks good. I also have MDT from yesterday on my list. And I have newer on the list, gap reversal. ENV, I actually like these two bottoming tails now. So now you can buy this over the yesterday's high. Oh, good. My bell didn't go off today to scare me. SO has just been a tank here. Utilities, look at that thing. Kraft Heinz, you can short yesterday's low as a day trade. And that's all I got there. All right, let's see what Xilinx does here. Howard, the rapid drop to the breakdown overextended the market, correct? Not sure what stock you're talking about. SPWR, McGraw.